If you've been doing your research on the home buying process, you've probably come across the term closing costs. Well, just what the heck are closing costs? Well, on today's episode of Ask a Lender, I'll be sitting down with Shelbie White from Fairway Mortgage, and she'll explain everything to us now. Hey y'all, Abby Husbands here. I'm a realtor in Austin, Texas, and if this is your first time stopping by my channel, you might want to consider subscribing, where I talk about all things real estate and Austin, Texas. In today's episode, I'm going to be sitting down with Shelbie White from Fairway Mortgage, and we will be discussing closing costs. We have a whole list of questions that people have sent in from us, and we're going to go through them one by one so that you can get a clear picture of just exactly what closing costs are. Hi, Shelbie White with Fairway Mortgage. How are you?
I'm good.
Good.
Good to be here.
Good. Okay, so today we're going to be talking about closing costs because there is a common misconception that people think when they go to purchase a home, they only need to bring their down payment. So say they're putting 5 or 10% down, 20% down. They don't realize that there is a whole nother list of items that they have to pay for, and those are called closing costs. So what exactly are closing costs?
Yeah, it can be a bit of a shock if you're not prepared. So if you think, I'm going to put $10,000 down, all I need is $10,000. When you see your first estimate, it can be shocking. So you have your down payment. So closing costs is not the same thing as cash to close. So closing costs are fixed administrative costs that are associated with getting a loan. Things like lender fees and title fees, those are closing costs, and they're administrative in nature. And then you have your escrows and prepaids. Those are for actual things like taxes and insurance and interest.
Okay.
And those are on top of your closing costs. Not everybody escrows. And then you have your third-party fees, which are paid to service providers outside of the lender and title company. They're collected at closing. So all of those things together is what your cash to close is. So when you're talking to a lender, your closing costs to us are your fixed administrative costs. So that's like a portion of what you're actually going to bring to the table.
Okay, so say closing costs are
you can lump them all together, and some people do. Like, what are my total costs to close? And people will say closing costs. Your total cost to close is all your administrative fees, any impounds for escrows or prepaids, your down payment, less any credits.
Okay, so it's your down payment plus your lender's processing fees.
Mm-hmm. So most lenders are going to have, they used to have a lot of junk fees, but most of us have gotten rid of all of those.
Okay.
For example, we only have a processing fee, an underwriting fee, and a doc prep fee. That's it.
Okay.
Now, another lender fee you might see or hear about is points. What are points? And points are optional. Typically, you are going to pay a point if you want to buy down your rate.
Okay.
So, let's say 5% costs you nothing. You want to pay a point. Maybe it gets you 4.75. And so that's called discount. That would be included in lender fees, but that's something you would opt to do.
Okay.
Be required to do.
So you have miscellaneous fees from your lender.
That's a good way to put it.
Okay. So you have your down payment, miscellaneous fees from your lender, title fees, and then your discounts and your points.
Yes.
That's one portion. Then another one are prepaids. Give me some examples of what prepaids are.
Okay. So a prepaid is something that you're paying for in advance.
Okay.
So just like car insurance, homeowners insurance is required to be paid upfront for the first year. So you would pay that in advance, even though it's for a service not yet provided. Interest is typically paid in arrears. It accrues, so when you make your December 1st payment, you're actually paying November's interest. The only time you ever pay interest up front before it's accrued is the month you close. So if you close on the 15th of December, you're going to have 16 days of prepaid interest because there's 31 days in a month. And they do that because your first payment will not be until February 1st, and that will be paying January's interest. But you owned that property in December for 16 days. So you have to pay that at closing. It's the only time you pay interest up front. So, and again, it's not for a service, you know, an administrative fee. It's for actual interest. If you're escrowing, where your mortgage company is paying your taxes and your insurance for you every year, then you're going to have impounds where we're going to put a few months of taxes and insurance into an escrow account. And that's because you don't have a payment the month you close, and you don't have a payment the month after you close. If we didn't collect at a minimum 2 months, then there would not be enough money in the escrow account to pay your insurance renewal when it comes due a year from your close date, and we would not have enough to pay your property taxes when those come due. So because we're collecting that from you at closing before they're needed, they're called prepaids.
Okay.
Prepaids and escrows. And then very, very different than an administrative cost, which is a fixed cost that is factored into your APR. These are for actual taxes.
Okay. So what about someone that's, say, buying a condo and they have HOA fees? How are those?
Those fall into the third party fee category.
Okay.
So you have your lender fees and your title fees. And then there's fees that we're going to collect for things that for services we're not providing. And we're going to pay those on your behalf. So you're going to have a recording fee to the county. You're going to have a survey fee to a surveyor. You're going to have an appraisal fee, and that goes to the appraiser. Same thing with any HOA fees. A lot of them collect transfer fees, working capital fees, and we'll collect those from you at closing, but they will go to a third party.
Okay.
And so those fall into that closing cost category. You have your lender, title, and third party fees.
Okay. So then you have your closing costs, prepaids, your down payment, and then your cash to close. So what is cash to close?
So cash to close is basically the sum of all those things.
Okay.
So if you are buying a house and you're putting $10,000 down, regardless of the sales price, because a lot of these costs are going to be fixed, but just to give you a rough estimate, if you're putting $10,000 down, you need to prepare for another $5,000 about in closing costs and prepaids. Because the fixed costs from lender and title fees are going to run about $3,000 to $4,000, and your impounds collecting 2 months of taxes and insurance are also going to be another $3,000 or so, depending on what the property taxes are. Now, obviously, you're buying $1 million property and we're collecting 2 months worth of taxes and a full year of insurance. It's going to be substantially higher than a $350,000 property. But most sales prices in Austin, you're going to be running about $5,000 to $6,000 on top of your down payment.
Okay. So there's really no, like, because someone has asked, my closing costs will be 1% of the price of my house. Well,
your fixed closing costs, but not your impounds. So right. I would prepare for 2%.
Okay.
Unless you're buying $1 million house, and then that's
right.
$20,000 would not be realistic. But in anything under $500,000, I would think it's 1.5% to 2%, depending on if you're experiencing.
So then how accurate are like those online mortgage calculators when you go to put in the cost of the house versus your down payment versus what your payment's going to be? Because I have found that when people use the online mortgage calculators, they're way far off from what you provide, which is a more accurate statement of what their closing costs will be, but also their monthly payment.
Yeah, so that's a good point, is that your fees are going to vary depending on the title company you go to, depending on your sales price. When I do an estimate, I like to prepare for the worst and hope for the best. So, my numbers are conservative. And so there may be a $50 courier fee on there to the title company that may or may not happen. You're going to pay the actual fee regardless of what I quote you. The only fee a lender has any control over are the lender fees. So even though I'm providing an estimate that has appraisal fees, survey fees, title fees, recording fees, I am estimating Once you're under contract and a title company has been chosen, they will send us their fee sheet and we will update those fees. But it won't matter what lender you go with, because those fees will be what they are regardless. And so that's kind of where we get into when you're shopping for lenders, and a lot of lenders out there will lowball those fees to make their bottom line look better. I don't want to do a bait and switch.
Right.
I'd rather have you be pleasantly surprised when they come in lower than be shocked if they came in higher.
Exactly.
Because you want to be prepared.
Well, yeah. And plus, like, you don't want to feel like you're misleading someone and then they don't find out until later. And then they're like, well, I don't want this house now because the payment's going to be different or the closing costs are a lot less than what I was expecting. So I do run
into that a lot with first-time home buyers.
Right.
They think, okay, I have $10,000 and they think they're going to put that down and they don't realize, oh, you need more than that. And we'll get into reserves on another call, where sometimes it's not just enough to have your cash to close, but you got to have money left over after closing to meet a reserve requirement. Right. So it's, and this is where your magic negotiating skills come in. There's a variety of ways to deal with closing costs. You can help the seller to pay them. We can give you a higher rate and then keep that premium back to you. And I shouldn't say that. Give that premium back to you in the form of lender credit. So there are a variety of ways. If you only have what you have to put down and you don't have those funds, there's very creative ways to find that money.
Exactly. Absolutely. Okay. Well, thanks so much. This was very enlightening, I'm sure. So anything else you can add in closing?
No, just, that's what I'm here for, as a resource to help you figure it all out.
Right.
And, there's nothing wrong with asking questions and finding out what you need to know so that you're prepared.
Awesome. Well, thanks so much, Shelbie. I'll talk to you later.
Okay, thanks.
Okay, bye.
Bye.
Well, thanks so much for watching. I hope you found that informative. If you did, please give me a big thumbs up, subscribe to my channel, or share this video with your family and friends. If you have any questions for myself or for Shelbie White, you can leave them in the comments section below, or you can reach out to me directly at Austin-Texas, homesforsale.com. Thanks so much, and I'll see you next week. Bye.